And welcome back from the break. I hope Erdem will show up. I don't want to take the presentation. There you were, Erdem. Welcome.
Good morning, Michael. Yeah, I've been waiting. I hope I didn't disturb before.
I know. Perfect. Yeah, but maybe we are moving a little bit back to the green transition side, but I think maybe overlooked also the human health side of the society benefits. But Erdem, the newcomer to the stock market, Donkey Republic, proud to present. Erdem is the CEO and co-founder of it, but I think you should take it from here.
Thanks, Michael. Good morning. My name is Erdem. Donkey Republic is a European leading bike sharing service. We were established in 2014, and you have some key figures here. And as Michael says, we have a vision to really bring quality, convenient bike sharing to European cities. We work closely with cities and make sure that there's a good service available with our turnkey solution. We had close to 10 million trips taken. Actually, these numbers are already a bit outdated, but and more than half a million riders in 14 countries, 75 cities or locations. I want to just jump into the second slide here. I have a background in public policy. And for us, it's really, really important to understand or to make sure that we do a positive impact on society. And we try to measure it as good as possible. The way we have done some studies, and this is one of the key parts, the outcomes. So if you look at what solution bike sharing brings, a lot of people might take only let's say the transport aspect into the picture, but as Michael said, the human health aspect, the CO2 emissions, the space that we have in the cities, they have different effects that are all quite important. So if you look at the SDGs, we see 3 of them very directly related to bike sharing. One of them is sustainable cities and communities, making it accessible for people to move around the city, reducing air pollution in the city and congestion are parts of that. Climate action, reduction of CO2 emissions, where cars and internal combustion engines, but also electric cars, due to their production, actually are very CO2 heavy. Even if you were to drive them on a fully electric grid, fully CO2 neutral grid, which is not the case. And then you have the good health and well-being, which is actually maybe not obvious, but obesity is an increasing and large problem, as well as diabetes globally, and as well as in Europe. And getting people to move every day up to 30 minutes with moderate activity is actually one of the key ways to reduce chronic diseases. That's why when you look into the calculations, what substituting a car trip with a pedal bike trip, you would get 1.1 euros savings in social savings per kilometer, per trip in reducing congestion, and half a kilos of CO2 emissions, and it's about 4.3 euros of health benefits. These are based on a 3-kilometer trip, which is the average trip length of a donkey. Actually, if you were to take that same trip on a car, which we here assume is also 3 kilometers, typically it's actually longer because you have to make detours. And where are the health effects driven from? It's the reduction of chronic diseases that you don't develop because you are keeping moderate activity, as well as reduction of air pollution and related diseases to that. But there's a negative effect on bikes, which is accidents related to bikes. So accident, both related to cars and bikes, are also taken into account in the health aspect here. But still, you see a very strong per trip benefit to society if you get people on bikes. Now, I think a lot of tech companies these days talk about positive effects. When Uber and Lyft came to market, they were talking about how people wouldn't take their own car and there would be a reduction of congestion. But then studies have been made, and we see that they actually made congestion worse. And finally, they've admitted a couple of years ago that they are making the congestion worse. And similarly, there is some question mark whether they are improving labor opportunities or employment opportunities, or actually and the economy in that way, or actually creating jobs that are not paying fair to people. The point of that is that when we have tech companies, including ourselves, of course, claiming that we have positive effect, I feel that we've listened to too much of numbers which are cherry-picked and not thorough. So one of the things we want to change at Donkey is that we work with third-party organizations, which is academics or NGOs who are credited to do such impact analyses, and then make sure that we are taking a holistic approach and not cherry-picking. And here you can see the different effects that we could identify with our partners of what transport modes have as impact on society. So congestion, public space, safety, health, emissions, labor market, inclusion of people, or accessibility, you could also call it, resource depletion. These are some of the effects that the existence of a mobility mode would bring to a city. And we were able to use the ones that are in the brackets here because there are studies that actually compared the effects of, let's say, bikes versus buses versus cars versus other modes and on congestion. So we didn't have to do such a study, which would be quite a big undertaking. But we were able to identify the studies in these 4 areas so far, and public spaces coming up soon with OECD, International Transport Forum, and OECD are conducting. And the studies and what effects we took into account, you can see here, there's actually the effects of physical activity on health, the reduction of chronic diseases, how that is driven by people having moderate activity on a daily basis is driven by DTU and COVI. There are a few other international studies, but we use this one. About accidents, we also have a couple of reports. Air pollution, we use Eurostat, European Statistics Bureau, and also for the congestion time delay costs, we use the Eurostat report. And now for life cycle analysis on greenhouse gas emissions, we use the OECD's guideline, which was published last year, comparing bikes, ride-hailing cars, combustion engine cars, electric cars, and scooters, and so on. So to sum up the results for you, and then we made a study with Dresden University, where we looked at each donkey trip, what vehicles or modes did people not use when they used a donkey trip. And you can see that a personal bike was actually 14% of the trips that people replaced using a personal bike, or they replaced a walking trip that would have been a walking trip was used by donkey. And at 1 kilometer of a donkey has about 17 grams of CO2 emissions. You could say, well, it's a bike, pedal bike, where's the emissions coming from? It's from the life cycle analysis, takes into account the production of the bike and also the maintenance of the bike. That's why we have 17 grams of CO2 emission connected to 1 kilometer of donkey ride. But then if you can compare what we have replaced about 7% car trips, 30% bus trips, 20% rail trips, 5% scooter trips. And these numbers are actually from Copenhagen between September and November last year. Pretty representative of our normal rider profile. And then based on these numbers, we are able to tell that one donkey trip is reducing greenhouse gas emissions by 126 grams. It's creating 2.5 euros of healthcare benefits and 13 cents of congestion savings. The reason that the greenhouse gas savings and congestion savings are relatively small is because we replace in Copenhagen relatively few car rides. You could expect that number to be higher in a city where car usership is higher than Copenhagen. Nevertheless, it's great to be able to say that based on replacement in Copenhagen, each donkey trip in Copenhagen contributes to society 2.7 euros. That is in healthcare and congestion benefits, not taking into account greenhouse gas savings. And we have facilitated so far 4.1 million trips in Copenhagen. That means that we gave back to society 11 million euros. The million is missing here in health and congestion benefits. So we are very happy to be able to put the numbers together, which have quite the credible institutions behind that are the experts. and us really just connecting the dots, essentially, with everything from the SDGs to actual numbers. And this is the reason, the impact that we are creating. This is the reason also why cities are increasing the financing our business. And now I'm sort of jumping from the impact side into talking more about business, if that's okay, Michael.
Yeah, perfect. It's a two-sided case, the impact investment. So perfect.
Right. Yeah, I mean, we are, of course, a profit-seeking business, but we are also creating great impact. So the impact that bikes create is being more and more understood by cities, and that's why there is more and more public financing becoming available and better regulations for bike sharing becoming available across Europe, actually across the world. And then we are fitting well to those regulations and winning more and more deals backed by public financing. So this is what this slide is talking about. Until 2016, we had one type of bespoke bike share systems driven by heavy investments. Then we had a few years of chaos where investment or venture capital backed business models, like actually ours, where investors have put money behind a new business model, where you had a lot of e-scooters and bike shares popping up across Europe. But then only those that took into account of running a very sustainable operation and business, not trashing vehicles quickly, not allowing free floating, meaning you could park them everywhere. But the way we do it, for example, we maintain our vehicles for 5 years. We also only allow parkings at a given public bike racks that we mark in our app, which is about every 100 meters across the city. Which means that we live well to conditions that cities have come up with to give contracts to companies like us, foreseeing that such regulations would come and actually gaining a good track record already in the last 5 years before these regulations were in place. And that enabled us to win a lot of contracts. So we won 40 or so of 65, 70 contracts that we've applied to. And more of these contracts we are winning because they are coming back and growing, or they refer us to some other city. And you can see here a bit the traction, which are the cities that we have been working with in the last year or so. You can see that we have a lot of traction in Switzerland, also in Finland, and then also in Belgium. Those are some of the markets where Donkey brand has worked very well for us. And this deal here, Antwerp, it's a really large deal that we are at a later stage of finding the contract with the city, which is very interesting for Donkey Republic. Then just to look at our results in 2019, and we were affected negatively quite strongly during 2020 and partially this year due to COVID, taking away a lot of the visitor revenue that we've had. And it has been a substantial part of our business, the visitor revenue, and we are expecting and seeing that the visitor revenue is actually coming back already more this year, and then almost back to normal we expect from next year onwards. But in this slide, you can see that in 2019, we had quite a strong part of our revenue from B2C business, which is rider revenues, so the dark brown here. And that business, together with the SaaS business, which is where we are essentially providing a software solution for our franchise operators. So we have 35 partners who are running about 60 cities. And these partners are buying the bikes from us and the software solution. And then they have the risk of the operations and risk of the bikes. And then they pay us a software fee, a recurring monthly revenue. You can see in 2019, that was a relatively small part of our revenue. Most of it was B2C business. And we had a small break even with our cost of goods sold being just below the revenue that we've generated. And then what you can see is the HQ costs were actually giving us a negative result in 2019. You can look at other companies like Bird, which has done a SPAC recently in the US, where their operational costs are actually more than 2 times of their revenue. So Donkey has been running a very good, responsible, or scalable operation compared to some of the peers, for example, some of the larger scooter operators. Then what we look for in 2024 is, of course, we'll have some growth in the mass rider revenue, which actually will be driven, point 3 here, by e-bike growth, overall fleet growth, but also e-bike growth. And then you have number 2, which really doesn't exist in 2019. And this is the increasing B2B and B2G revenue. B2G revenue referring to public finance, which we are very happy about. And these are the city deals that we are winning directly as Donkey Republic. And we haven't signed this deal with Antwerpen, but that would be a very good example. We have 3-4 other publicly financed deals, such as Kortrijk and Randers and Brest in France and so on. And then you have number 1, which is SaaS revenue. You can see also SaaS revenue is also proportionally growing quite a lot. And the good part about SaaS revenues is very high profit margin. So mass revenue has relatively small profit margin, but SaaS revenue here, number 1, and also to a large extent, number 2, has high profit margin. So you can see what will drive Donkey profitability in 2024 is growing SaaS revenue, which is recurring software sales, high margin. And we have mass government and corporate sales, which is also high margin and also recurring. And then the business that you probably think is most of our business, which still is, which is the rider revenues, where we own and operate the bikes.
Perfect, Erdem. Should we take some questions? Are you ready for that?
That was my last slide, and yeah, good.
Perfect.
Good to take some questions.
There's a question about Brest and Cairo deals. I don't know how much you can tell about it. How big are they? Are they big deals compared to Antwerp and such? And they are pending. So can you elaborate a little bit about the deal size? Is that moving up? I don't know how much you can say.
Yeah. I believe we have made a PR on Brest. Brest is 160 e-bikes, which are publicly subsidized by the city. We also had included Antwerp deal in our company description. So what we have described is sort of the deal size and also the status. So Antwerp, until the contract is signed, is not a deal that we have in the pocket. Brest is signed and is about to be launched. And Antwerp deal is about 10 times the size, so it's 1,700 e-bikes, and it's also longer duration, so it's at least 5 years deal. You can look at the company description for more info on that one.
And there was also Cairo, yeah.
Cairo deal, I'm not sure what we have released on that, so I want to refrain from saying something, but it is not finalized also. I believe we have done a PR on this. It is not a very large deal. It is a SaaS deal, as you also see here. It's a SaaS deal, so we only get the relatively small but high margin software revenues on 500 pedal bikes, and it's not yet confirmed.
And there's a little bit about the time frame. How long are they to accept or decline? I guess those deals there. So a little bit about the Antwerp and such deals when you announce them as possible. How long time does it normally take before it gets a final deal? Yes.
Since we wrote Antwerp in the company description, where the region had declared us the winner of their scoring, of their assessment. But from being there until you get the contract, there are a few statuses, a few steps. And the final step is the signing of the contract after negotiation with the city. We are in that step now. And we believe, based on our initial conversation with the region, that it should take about a month. But you never know. We are ready that it might take up to 3 months. That's the best guidance I can give.
And a final question regarding all those data you have, very comprehensive data. What is saving? Are that a demand now from when you deal with the governments or the municipalities of the city, or are everybody demanding it, or is not everybody? Is it still on other deals that you are going to get signed? If you understand what I mean, that you have this competitive advantage by having those data.
I did not understand the question about the data.
The data you're showing very comprehensive data set, what you actually save the society. Are the cities demanding that when you are looking to do a deal with them?
The cities receive data on usership of bikes on a sort of publicly standard format, what is called GPFS format. And they are able to see how many bikes we have available. They also get a number of trips, but the cities don't ask us at the moment what is the impact we created for society. We would love to have more close dialogue, and we're having those dialogues with some of the cities where we're telling them, look, each donkey trip is saving you guys and us all together, of course, about €3 only with these two effects. If we include space, I believe it would be €4+. And when they look from their side on financing, publicly financing donkeys, if they were putting €1 per trip in donkey in public financing, then we would be able to offer donkey trips for free to everyone. And in that scenario, actually, we would probably replace a lot of private bikes as well, because it's a free service. Why wouldn't you use it? And the great thing about the cities doing that, and I am pretty much actively advocating this, with private bikes. If you subsidize private bikes, let's say you can go to a bike shop and buy a private bike with 50% discount, because riding bikes is great for society. But you cannot measure how much people ride their private bikes. So you could buy a new road bike, put it in your home, and ride it twice a year. But with a shared bike service, you're actually able to tell the city not only that bike has ridden, you could actually tell which hour and which area it was ridden at. So there are contracts in UK, not we have them, but some other bike shares have them. I am also the chair of the European Bike Sharing Group, so I'm quite closely connected and aware of the policies happening across Europe with different bike shares. But there has been 5 contracts in UK where the bike trips are being subsidized rather than bikes on the street are being subsidized. And if you get the trips subsidized, then you have much larger room to scale, because then you can start to offer bikes at a lower cost to the rider. And when it's basically not costing people anything, then it will be easier to get a lot more people to use it. And cities can target which area and hour the bike should be used at.
Perfect. I'm afraid I need to stop you there, Erdem, but it looks like this could be some of the future drivers for your business. Thank you very much, Erdem, for taking us through this one.